what a phenomenon this is. We have a world awash with more debt than we've ever seen in the history of the world. Meanwhile, it's not enough, and it can never be enough. It must constantly and relentlessly be fueled more and more and more. Otherwise, this just ends. We just stop.
What's up, guys? I'm Nobody Special, and I am so happy today because we have a rare treat for you. We've got the man, Gregory Mannarino, is here with us today, the King Lion, to talk to us about what is going on in the debt market. Greg, how you doing, sir?
I'm doing fantastic, and I would take the opposite side of that trade. I think you are someone special, bro. That's the truth.
Thank you so much. I appreciate that. And thank you for being such a swell guy, by the way. Long overdue, thank you. When my channel was in its infancy, I did a video about the MMRI. Somebody had asked me about it. And, I was a little smug in my video, and I mentioned a couple of things. And, here's this guy with no following on YouTube, and he comes in and he starts messing with your formula. And I didn't know how you were going to take it. You're kind of known for being passionate in your opinions and everything. So it was kind of risky, but you took that so in stride, and you were so cool and so gracious about how you did it. You actually shared the video. You said some really nice things, and that very easily could have gone the other way. Who is this clown who's messing with my formula? So thank you for being such a stand-up guy and so cool about that. All those, I guess it was about a year and a half ago now. Time flies.
It does fly. Look, I was happy to see you take it to the next level, do whatever you wanted to do with it. Honestly, I want to create things and put information out there that people can, do what they want with it and play with it and see if it works or not, whatever. I think it's important, and I did appreciate what you did. Look, here's a guy, who looked at this and said, you know what, I think I could do something with it, and you made it however you thought it worked. And that's fine. I didn't see a problem with it at all. And some people follow it. Some people like it better than my version of the MMRI. Yours is the MMRI, if I'm correct, right?
Yeah. Well, I guess I got to eat a little crow too, because I was dead set that 2.2% on the 10-year was that trigger point where something was going to pop. And obviously here we are sitting at 4.3, so much for that 2.2% level that I mentioned in the video. So, in hindsight, the speed and ferociousness of the Fed's move, I think, caught a lot of people off guard. And we're going to talk a little bit about that today,
everybody got caught. Nobody. I don't care who you are, how many letters you may have after your name, MD, PhD, Nobel laureate. I don't care what kind of an economist you are, a guy who follows this stuff. This has gone so far off the freaking Richter scale, so out of control, so absolutely out of control. No one ever thought we'd get here. But these central banks, they're very crafty in what they're doing here. And all this is what are we seeing? We're just seeing an underlying problem get monumentally worse. The economy around the world, we're dead. This thing is on life support. The markets and the economy have no connection at all anymore. So, people say, hey, where's the crash? The stock market is just being propped up, but the real crash, or the people are hurting. The people around the world, not just here in the United States, a global phenomenon, people getting destroyed, being wiped out. There's where the crash is. The fact that the market is defying gravity for now doesn't mean it's going to remain this way. Risk in this market is so out of control. And we're even hearing warnings about debt market issues from the mainstream media. If they have to cover something, there's a problem, okay? Because they don't want people to know about this, anything. The whole problem with the banking system going on is absolutely tremendous. It's right under everyone's nose, but they're not talking about it. I've been doing a lot of talking about this as of late. But anyway, look, the people that follow our work, I think we're preaching to the choir. Hopefully we're getting through to more people. Hopefully people that do follow our work are sharing our work so they can get a better handle on this.
So I'm going to share my screen with you here for a minute, because we've got the Fed coming up this week. On Wednesday, we get our next FOMC meeting. And I think the market is pretty much in universal agreement that we're not going to see a rate hike this week, that the pause is coming. So the real question is about November. Now, what we're looking at here, CME futures, this is showing us about a 34% likelihood of a rate hike in November. So the market right now is betting seemingly that the Fed is done here. What is your take on November? Do you think the Fed is done? Are we still going higher, or is the pivot right around the corner here?
The market seems to believe it's coming sooner than later. I've been telling people that I don't think so. I feel that the Fed has the people where they want them by the throat. The market is discounting where the Fed's going with this. I think it's possible that we're going to get a pause, cuts. I don't see them coming anytime soon. But I think honestly we're gonna get a hike this week of 25 basis points hike. A lot of people are writing to me even this morning because I asked for their opinion. A lot of people think they're not going to raise rates right now, but I just can't imagine a scenario where they're not going to do that. We just got another rate hike out of the ECB. Fed's going to follow suit as well. These banks work in tandem. Anyway, so come the next meeting, I'm not even willing to say what I think they're going to do yet. A pause is probable. I would say it's, in my view, it's like 50-50 right now. But what do we just get? I mean, they think we don't pay attention. We got this wholesale inflation number that came in last week, almost twice as high as they expected it to be. Inflation is going to continue to rise no matter what they do. They can raise rates. They cannot raise rates. They can tell us any tale they want to. Inflation is going to continue to rise as central banks continue to inflate. It's out of control. It's not going to stop. We're going to see debts and deficits explode higher from here. And inflation continue to rise. There's no doubt if that's where it's going to go, no matter what they decide to do. How this affects the market, people believe one thing's going to happen, and generally the polar opposite does. I still believe this is an environment where this is going to sound crazy, but I've been net long this market for an extremely long period of time. I'm still long the market. I still think this market, because of the presidential selection cycle, is going to get propped up. Whether the Fed's going to find a way to just three things. One, suppress rates somehow or the other. Two, weaken the dollar one way or the other. Or three, get in here and buy the market. The Fed buys large cap stocks, period, the end. Everybody knows it. It's no secret. But that's one of the three or all of the above to keep the illusion. The illusion of the market is an extremely powerful thing. The general population who has no idea how this works whatsoever looks at the stock market and thinks the economy is fine. We're strong. Everyone's rich. We're doing fantastic. And people get off looking at those numbers on the screen. Oh, my 401k, my investment plan is doing great. My housing prices is going up, and they love it and they get all giddy about it. Then when all this reverses, they wonder what happened because they're not paying attention because of the illusion of the market. So that illusion, I think, is going to be maintained at least through this presidential selection cycle, and then we'll see where we go after that.
So you mentioned the presidential election cycle. Last year was kind of interesting with the midterm election cycle, where we saw this massive dumping of the Strategic Petroleum Reserve, 180 million barrels of oil from our reserves dumped on the open market. And obviously oil prices reacted to the downside pretty strongly. Much of that decline that we saw in inflation was driven largely by that. Now here we are, we're seeing inflation. It looks like it may be turning and heading higher again. And we're back into the mid threes, being driven largely by energy because we've got the Saudis and the Russians now cutting supply. And it looks like they're going to cut enough supply to offset all of the dumping of the Strategic Petroleum Reserve from last year. So now we're kind of in the opposite. We're heading back into another election cycle, a bigger one, the presidential one, right? About half of voters only vote in the presidential elections. We've already dumped half of the SPR. Now we've got oil heading back up over 90 a barrel. Do you see inflation and oil playing a role in this election cycle? Maybe not so much politically, but what are the options here if they want to suppress oil again? Would they dump the other half of the SPR, or is there something else they can do? Where do you see oil going from here?
I started telling people that oil was on sale big time at $67 a barrel. Today, we are over $90 a barrel. If we're looking at Brent crude, WTI is like 91 and change here. I nailed this to the wall. Me and the people who follow my work, it's going much, much higher. I think if we do get some kind of a drop here because of whatever mechanism that they want to utilize, all it's going to do is set a new floor for crude, which is going much higher from here. I would not be shocked or surprised whatsoever. In fact, I believe we got $100 a barrel coming maybe more than that, 100 plus before the end of the year. I sincerely believe that is where it's going to go. In fact, I posted a chart this morning looking at the trend here with regard to crude. Has nothing to do with supply and demand or anything else anymore. This whole thing is taking on a whole new thing with regard to again, what does energy do? People don't understand the power of crude oil and how it works for the market here. By keeping crude oil propped up, it boosts the entire energy sector. The financial sector gets a boost, and just pulling these two sectors higher pushes the entire market higher. Again, it maintains the illusion of the market. People think everything is just fine. Personally, I do not believe we are in a presidential election cycle. I think the president has already been selected, and it's just going to be someone who's going to play the game here. They've already put in their new puppet, the new vice chair of the Federal Reserve, this Jefferson guy, whose his platform is to just spend us into oblivion, and then some, poverty and inequality. So you can see where this is going to go. They already got that set up for the next puppet, whoever they're going to put behind the Resolute desk. I don't think it matters at all anymore. I've said this for a very long time. I don't even think we have a choice. But again, it just goes back to people enlighten Greg Mannarino as to who runs the economy, who runs the financial system, who runs the financial markets. And I'm going to tell you, though, that entity is who controls the world. They control the flow of information. They control everything else. And we obviously know this is central banks who are pulling the strings. They're the puppet masters, everything. And they're working in concert, every single one of them right now, to fulfill their over century-old game here to become the lenders and buyers of last resort. This is why I can promise people that are listening to us here today that you're going to see debts and deficits balloon to heights that people aren't going to believe moving forward, regardless of anything else. And who's paying for it? We are. But what can we do about it? Again, it's what it comes down to. What I've been telling people for 1,000 years so far. It seems like 1,000 years is, betting against the debt, becoming your own central bank, putting yourself in the right spots right now. But again, at this moment, I still think, and people are going to hit me hard for this, I know it, but I still think we need to stay long the market until, look, they're managing to prop this up, and I think they're going to until the end of the selection cycle. After this gets done, then maybe we need to look at things. But I mean, it's all based on risk. Risk in this market, according to your indicator and mine, is dangerously high. According to my indicator, the MMRI, we are 20 points ish or less from extreme risk. Now, extreme risk obviously raises the specter that some type of an event can occur, which will hit the market very, very hard. We'll see. Just because if we're in a low, let's say a low MMRI or low MMMRI, doesn't necessarily mean that there's not going to be a moment here where the market could take a big hit too. But nothing makes sense anymore. Valuations don't matter. Forward guidance doesn't matter anymore. PE ratios don't matter anymore. It's crazy what we're seeing here, and the distortions that exist are just beyond belief. And I even from a person like myself that looks at this thing around the clock, it's hard for me to get my head around it. It's just that extreme.
Now, one of the main mechanisms of distortion that has created this situation that we're in has been obviously the massive injections of liquidity of the Fed throughout the pandemic and what continued through 2021. I'm going to share a screen again here. What we're looking at here is the overnight reverse repos. And this is what I've always interpreted this as is the leftovers of all the Fed liquidity that was pumped into the system in the earlier part of this decade. And we saw a big drop down in this. This thing dropped by $90 billion on Friday. We're down several hundred billion just since the debt ceiling debacle finally ended. This is liquidity, in my interpretation, drying up in the debt market. And now there's about 1.4 trillion left when there was about 2.5 back in December. What do you see happening here? When this gets to zero, what happens next once this thing runs out? Because it's dropping pretty fast. Maybe we've got a few months left, and this is largely what's fueling a lot of this expansion in multiples in the stock market. But when this runs out, then what? What does the Fed do then?
They're going to come up with some other kind of a scheme. Liquidity is drying up. I've been warning people who follow my work about this for I don't know how long. The system, you see, what people need to understand, and I know you get it probably clearer than anybody else here. the system works in a perpetual vacuum, a constant state of deficit. And things like that reverse repo program, they must be instituted and or reinstituted to fake the market, to make the market believe it's more liquid than it is. It's just so in our face. And when this runs out, there'll be another thing, another program, another this, another that, another way to fake the market, to trick the market that it's more liquid than it is. It's an incredible thing to see. And I just don't imagine, I can't imagine a scenario where either this program or something just like it is going to be instituted to again trick the market to believing it's more liquid than it is, because liquidity is drying up. It's what a phenomenon this is. We have a world awash with more debt than we've ever seen in the history of the world. Meanwhile, it's not enough. And it can never be enough. It must constantly and relentlessly be fueled more and more and more. Otherwise, this just ends. We just stop. We end up in a credit freeze scenario. Everything stops functioning. The system just locks up. They won't allow that to happen. And what we're doing here, by the mechanism of keeping this propped up, is seeing inflation skyrocket around the world. It's the currency that's being attacked deliberately by their respective central banks. A race to the bottom. I've told people this, I don't know how many years. 10. This has been going on in our face, and it is getting progressively worse. People don't understand it. And then you got this nonsense of we're raising rates. We're going to raise rates, and eventually this is going to make a difference, and we're going to see inflation disappear. It's not even meant to do that. It's just cutting credit off to making credit less available to small businesses who are shuttering at the fastest pace since the freaking economic shutdown here. We're seeing exactly what we would expect to see in this kind of a situation. You're fulfilling the corporate agenda, the middle class getting systematically wiped out. I mean, this is stuff I've been warning about for a decade. And to see it now in your face unfolding is a shocking thing, I think, to most. But to me, like we started this video off before we even started recording, nothing surprises me anymore. Nothing, because we've expected it. Whatever is coming down the pike, believe me, and I know you get it, ain't going to be good for anybody. All right, all this is going to be about more control, more power consolidated in fewer and fewer institutions here. We're in the middle of a banking crisis right now. We have more banks applying for more cash from the Federal Reserve. We got 22% right now, and anyone can look this up, of commercial banks now getting support from the Federal Reserve, with more coming. It's getting so crazy here. But again, this is all about a new system, a new paradigm. And again, other words, this exact words I've used for many, many years, and a whole entire new system. So I want people to be ready for it.
Wow. So, you touched on a couple of key things there, the drying up of liquidity in the debt market and companies and banks scrambling. Last thing I want to run by you here is these two headlines that caught my eye in the last couple of days. We got from S&P Global, August added 57 more U.S. corporate bankruptcies. 2023 total now tops the prior 2 years. I think it was by June, we had seen more corporate bankruptcies this year than the entirety of last year already. Now the numbers keeps going up, 57 more corporate bankruptcies. And then I saw this one in the Wall Street Journal on September 8th, companies pay more to borrow in a record bond rush. We've got even good rated companies, AAA rated companies, are scrambling to borrow in the corporate bond market right now. Despite these high rates, money's more expensive than it's been in over a decade. And yet all these companies are scrambling to borrow while all these other companies are going bankrupt. Yeah. Is this the spike in demand for money? Are we seeing your scenario play out, this big seizing up in credit markets? I mean, otherwise, why would a perfectly good company be going in a rush to borrow at these rates unless they thought maybe that money won't be available next month?
No doubt about it. Like we were just talking about here, they're cutting off the availability of credit here to people, and then they're making it harder for institutions to carry on. Again, to me, we're going to see more of this. We're going to see more of this kind of a situation as the system is consolidated. They're really being very crafty and successful in in pushing, keeping the power, I guess, in fewer and fewer hands as we move forward. It's key. It's key to the new system rollout, in my view. The new system is all about control. They want to see what they can get away with here. They're going to push people as hard as they possibly can. They're creating dependency on the system like we have never seen before. It's all plays in together. One element of this cannot be separated from another element of it. It just seems like every single thing that, if people are paying attention, that you would expect to see in this kind of a situation is occurring. So that should tell us that we're very close to something big, a big change coming here. And I think, again, we'll get through the selection cycle, and then we'll see where we go from here after that. But this is, I think, what we're going to see moving forward, exactly like that. And it's exactly what we should all expect to see moving forward.
Well, Greg, I want to say thank you so much for taking the time to talk with us. I know you're a busy guy. You put out so much content on your channel every day. It's fantastic. Folks, I'm going to put a link to Greg's channel down in the description below. Check that out. Of course, tell him that nobody sent you when you're there. Leave him a comment. And Greg, I'll give you the last word. Anything you want to leave us with?
Just, look, people have the high ground. Understand what's happening to you, what they're doing here, and nothing that's coming is in your interest. Is realize that. So we got to embrace each other. What I tell everybody every Friday: love each other, care about each other, be charitable to each other. It's just so important. All this is well and good, and it's fun to watch here, but it's the result of this all that is going to really, it's going to be a defining moment for a lot of people, for the people of the world, I think, and people that follow our work, I think, are prepared. They know what's happening because we're telling them, we're saying, this is what you need to pay attention to. This is what's happening, and this is the most likely outcome. And I don't want people to listen to me or anyone and just take that as gospel truth. Think about what it means for yourself. Research the stuff that we're talking about. Does it make sense to you? And then think about what you need to do about it. That's all.
All right. Once again, folks, that was Greg Mannarino. Link in the description to Greg's channel. Show Greg some Melonhead welcome by giving us a thumb up on this video, by sharing this video, and, of course, dropping a comment down below. Greg, thanks again for being with us today. Always a pleasure to talk to you. Everybody else, until next time, live small and dream big.